I'm going to show you one of our swing trade techniques. Let me make this smaller so Kim doesn't yell at me. Look at this. One of our techniques on the swing trade side, we use our 55 EMA, which is this bottom line here. If price is above it, we're taking calls. We wait for our first green box or circle. These will be our calls. And when we're undervalued, we take our first red box to the downside. Just trading this simple technique, we expect to win over time. I'm going to go through all this. Here would be a call. I'm looking for 2 or 3 points of movement to the upside or more before I go risk-free. This right here would be a winner. We get a reset. I take calls here. We gap up about $2 right there, $2.50. There's another winner, 2-0. I take calls here, 3-0. I take calls right here, 4-0. I take puts right here, 5-0. Now I'm looking for puts. I take puts here, and price pushes down. Doesn't look like much, but think of it. 47 down here to 43. That is a 4-point drop. So we're 5-0. This would be 6-0. We take calls here. My stop out is a close below the 55. Next day we close below it. I am now we were 5-0. I am now 5-1. Then I reverse. I take puts right here. Now I am 6-1. Price rolls over. Then we get a reset. We take puts right here. We are now 7-1. Then we take puts right here. We are now 8-1. Then we take puts here. We are now 9-1. We then take calls here because we're back above the 55. We are 9-1. We are now 10-1. We get a reset. We take calls here. Never get expansion. We got to cut it there for a loss. We were 10-1. We are now 10-2. We take puts. Next day it drops about $4. We're 10-2. We are now 11-2. Then we take puts here. Next day doesn't look like much. Price moves down about $3 or $4. We were 11-2. Now we're 12-2. We take calls here. We are now 13-2. We take puts here. We are now 14-2. We take puts here. We are now 15-2. We take puts here. We are now 16-2. We take puts right here. Next day, gaps down $2. We are now 16-2. We are now 17-2. We take puts here. 1, 2, 3, 4, 5, 6, 7 days. 18-2. We take puts again here. I remember that one. 18-2, 19-2. We take puts here. Price pushes down right there. 19-2, 20-2. We take puts here. 21-2. We take puts right here. Never pushes back down. And we get stopped out right there. 19-2, or no, 20-2, 20-3. Then we take calls here. Price gets underneath the 55 right here. 22 and what was it? 20-2 or 20-3. Now we're 20-4. We take puts here. We'd be 20-5. Then we get stopped out for that loss. We take calls. 21-5. We take calls here. 22-5. We take calls here. 1, 2, 3, 4, 5, 6. 23-5. We get a reset. We take calls here. 24-5. We take puts here. 25-5. We take puts here. 26-5. We take puts here. That goes on to be a loser. 25-6. We take calls. 26-6. We take puts here. 27-6. We take calls here. Get stopped out. 26-7. We take puts. Get stopped out. 26-8, I believe. We take calls. 27-8. And we get calls here. Price pushed up $2. 28-8. 29-8. So if you take a probability, 29 plus 8 is 37 divided by 37. We have odds better than random. I think I had a couple more winners, but I was trying to keep track and count at the same time. So if we have about an 80% edge over the course of the year, is that odds that you would give yourself on the swing trade side? Absolutely. That's one technique, right? The last little thing I like to do on another swing trade technique is this right here. We come back here to our template. Wait for it to load up. SPY's pushing down. We have a custom tool here. We use our reversal arrows. We're going to cut this one right here. Put it back up. Put it in the daily time frame. This is our second technique for swing trades. what happens is simply this right here. If you get a down arrow and you get expansion in your favor to the next side, you go risk free. You get an expansion arrow to the upside. Next couple days, depending on the move, what you're up, you may want to go risk free. So you go back over time. Lately, it's kind of been choppy, but guess what? We still have a good probability. Check this out. Let me see. All right, we'll start from right here. Right here, we take puts, previous structures a stop. We go out of the money, so we don't risk a lot of money. We take puts here. Couple days, we get expansion in our favor. We're 1-0. We take calls here, gaps up. We're 2-0. We take puts right here, get expansion down. We are 3-0. We take calls here. Next day, we're up. We're 4-0. We take puts here. We get stopped out right here in 2 days for a loss. But meanwhile, we hedged ourselves with the call. So we were 4-0. With this one, we're 4-1. We take calls here. We are now 5-1. Then we take puts right here, 6-1. We take calls. 7-1, we take puts here. We get stopped out right here for a loss. 7-2, we take calls here. 8-2. We take puts right here. 9-2. We take calls right here. Here's our stop out. It plays out over the next 3 days. We are now 10-2. We take puts here with the stop loss right here, and that's a loser. We're 10-3. We take calls again right here. We get expansion to the upside. We are now 11-3. We take puts here. We are 12-3. We take calls here. We are now 13-3. I'm about to take puts right here at the end of the day if it closes with the stop out right here at 410. So if we were 13-3, 13 divided by 16, you have about an 81% probability to capture right about 50% ROI. I will share with you this put right here. At most, I was up about 35 or 40%. Sometimes I'll go risk-free if we're headed into a zone. This move right here, on this next day, we pushed up. I want to say I bought contracts for $3.50, and I ended up getting about $1.10 or something out of that little move right here. So the key to this is you take out of the money contracts, so you can only lose what you risk, but you're never going to lose 100% of it. First off, second off, if you have odds to get close to 50% ROI, you got a good technique. So now with this 80%, I tell people 75%. With our other swing trade chart, we normally see about 80 or 85%. When you combine both of them together, we get swing trades for the rest of your life with advantages and odds. It comes back to you to use proper risk management. Now, the last thing before I give you back your Friday is I told you I invest in stocks. One of my favorite companies to invest is Hershey. I am from Pennsylvania. Sweetest place on earth, Hershey's chocolate. Everybody heard it. What we like to do, we wait for price. We wait for price to get underneath the 55 EMA, and then we wait for us to get our first green box. So I put a line here. We're buying shares right there, right? This is a little bit slower paced, a little bit longer of a technique. I'm buying shares there, right? I bought shares over here at 176 a share. I bought shares again here at 208. My cost average, I don't know why I put this line in up here. That was where our measured move target was. The cost average of 2 entries, right? If I bought an entry here and I bought an entry here, the middle price point is right here. My cost average is about 190 on the share side. Look where price is at right now, 230. So if you take 230 minus 190 and you equal it as $40 divided by 190, you're sitting in 21% ROI on the shares. Plus, we're capturing a dividend for the long haul. So we're really up probably about 24, 25%. At any given time, you could take profits if you're happy with it. If you bought shares right here and you saw up here, you're up from 170 to 220. You're up about $50 a share. That's good money, good profits. You've captured one dividend. You could sell out right here, collect the money, right? Collect the money, then wait for another opportunity to buy into shares again and do the same thing. As we pushed up, you could have sold out of the shares, bought in again right here. Pushed up onto the shares, bought in again down here. Pending we get a setup, And you could keep doing that if you want, or if you're like me, I'm using my profits to invest into some of these shares for the long haul. So my idea is if I keep buying shares now at 34, where are these shares going to be at 40? So it's my long-term plan. However, I do kick myself in the head because it's hard for me to sell out of the shares because I know it's my long-term goal. Another one that I got right now that I'm probably going to sell out is XLM. I have a cost basis of this at $40 a share. So I've already collected enough that I've already accumulated free shares from the dividend. And look where this is at right now. 40, 80, 120. I'm up almost 200%. I'm up 150% ROI on my shares that I could sell out right now. I'm probably going to be smart, and I'll probably put a limit in to sell out at $100 a share. And if it never sells me out, good for me. If it does sell me out, I went from $40 a share up to $100. So with that being said, we went a little bit over. That is how I day trade. That's how I swing trade. That's how I invest into my shares. I'm strategic. I try to follow, or I do follow my plan. I'm very good at that. Over the edge or over the time, that is my probability, and that's why I feel that I'm good at what I do. With that being said, if you guys ever have questions or concerns and you look forward to trading with us, we do trade Monday through Friday. Reach out. I'll let you know how you can get involved. But in the end, like I said, I'm going to say it again. Trading is all about being consistent, trading your plan that you create for yourself, and using proper risk management. With that said, I appreciate you and your time. Reach out if you have any questions. Go have a blessed day. If you made money this week, I have. If you have too, do something that you enjoy. You deserve it. Treat yourself as a reward. Let's come back and do the same exact thing as we did this week, next week.